We are today situated at one of Western Sydney University's campuses. So I would like to acknowledge the traditional owners of the land. Western Sydney acknowledges that today's meeting is being held on the country of a Darug people of a Darug nation and acknowledges the ancestors who have been traditional owners of a country for thousands of years. Western Sydney University also wishes to acknowledge and pay our respect to the Darug's people, elders past and present. This event is being supported by CPA Australia and it's sponsored by the School of Business at Western Sydney University. Just a few housekeeping. So if you have a question, we would like to take it at the end of the session, unless, of course, to quote Mel's words, you have a really burning question or you want clarification, you might ask during the session. Feel free to type your questions in the chat box for those online. So our presenter today is someone who doesn't need much of an introduction. And most of the people who are, sorry about this. And most of the people who are in the not-for-profit space, oh dear.
Ushi, just hang on a second.
Yeah.
I think Charles Mahogadish,
Yeah.
if you can please mute yourself. And also, I think
I can mute them if you want me to.
I think that's the only other person. Subaka,
Okay.
please, if you could mute yourself as well. I think everyone else is muted, so hopefully we won't get any feedback. Belinda Luke, I think you might need to mute yourself as well.
All right, so Mel is someone who doesn't need much of an introduction. Pretty much all of us know him, anyone who's working in the not-for-profit space. And as we know, Mel leads the collection of reporting from charities with a focus on reducing unnecessary regulatory obligations and ensure the ACNC has sound corporate governance arrangements. Mel started his career with the ACNC in April 2016. Prior to this, Mel worked at the Australian Taxation Office for over a decade across compliance, internal policy assurance, as well as operational, financial management and government tax management roles. After graduating from university, Mel traveled and worked in England in a social services finance role. He began his career at a large professional services firm and has worked for the Victorian government in a finance role. Over to you, Mel.
Thank you very much, Ushi. Good afternoon, everyone. Thanks for the opportunity to present today, talking about the changing landscape that is charity reporting in the Australian context. And this is all to support trust and confidence in the charity sector. I do want to extend my acknowledgement and pay my respects to First Nations Australians and the lands on which we live, the air we breathe, the water we drink, and the skies that we look at. I also extend a warm welcome to any First Nations Australians who are in attendance, and I commit myself personally to taking actions to further reconciliation in Australia. I do want to introduce my colleague, John Aitken. So John is on the line. He's one of the accountants in the team at the ACNC and is here to provide support and also make sure that any questions that people have can be answered fully. And so John will be supporting me throughout the presentation as required. As Ushi said, this webinar is being recorded, so please bear that in mind, and thank you for your participation today. Let's jump in. So, as I have said, today is really about providing an update of the changes to the reporting landscape which are affecting charities, and that is really to support trust and confidence in the sector. We're going to cover a range of things today, and this will start with the ACNC legislation review, talking about the red tape reduction measures which we have implemented. We'll have a focus on related party transactions, and that's really the core of today's presentation, which is a new requirement which is about to be implemented for charities completing their AIS. And then we'll finish off talking about some specific ACNC resources, which we encourage and commend to you as practitioners or working for organisations which these are relevant for, and we encourage you to cascade these resources and make these resources known to help the charity sector understand their obligations and to comply. There'll be several things that we'll talk about today which have been abbreviated throughout the presentation, and if you hear me say AIS, AFR, KMP or RPT, this is what I am referring to. The annual information statement, that is the form which charities need to complete each year to fulfil their reporting obligations to the ACNC. Some organisations do not need to complete an annual information statement, and an example of some of those entities are organisations which are registered with ORIC, that is the Registrar of Indigenous Corporations. So not all charities, but the vast majority of charities do need to fulfil this obligation every year. Annual financial report. The reporting obligations to the ACNC are driven by charity size. Charity size is determined by revenue, and annual revenue, once that reaches $500,000 in a year, an organisation that is a registered charity is required to prepare a financial report and submit that to the ACNC. Again, there are exceptions. The most notable exception is an organisation which is a basic religious charity, so they don't have any financial reporting obligations. Key management personnel. So this is a new reporting requirement which was introduced in 2022. I'll talk to that shortly. And as I've just said, related party transaction is really the core of what we want to cover today. So an update on the legislation review. So many of you would recall, it seems like a long time ago now, in 2017, a 5-year legislation review was triggered, and that's a core part of the ACNC Act. And that was completed in 2018, and then in 2020, so 2020, the government responded to the recommendations that were provided by the independent expert panel. So there were 30 standalone recommendations, and these reporting changes all stem from some of those recommendations in that review. One of those recommendations talked about increasing the charity size thresholds, which again, as I mentioned earlier, the size of a registered charity determines the reporting obligations. So the expert panel suggested that revenue should be increased so that small charities that do not need to prepare a financial report and have more proportionate, simplified reporting obligations, that should be lifted so it is up to 500,000 in revenue. In terms of the medium cohort, that is in place from 500,000 up to but under $3 million in annual revenue. And once a charity reaches that $3 million mark in annual revenue, they are required to get an audit to accompany their financial reports. Medium-sized charities which do need to prepare financial reports, they are able to have a review as their assurance option. So obviously there are exceptions to this. where the governing document for a particular charity requires perhaps an audit, and that could be for many different reasons. But under the legislation and the framework which we administer, small organisations just need to complete their AIS. Medium organisations need to prepare a financial statement which at a minimum must be reviewed. And then once you hit the large part of the sector, then again, financial report is required and an audit is required to meet ACNC reporting requirements. The second line of this table here talks about a statement of resources and commitments. So
sorry, Mel.
Yeah.
A question. We can't see your screen. Are you actually presenting?
I am. That's interesting. Okay. Let me retry. Sorry about that.
Oh, sorry, it must have just been.
Oh, no, I can see it. Yeah, some of us can see it.
Oh, okay.
I can see it too.
Yeah, you just didn't move on from the slide, but we could see it.
No, I
Interesting.
can see
So
it now.
the slide that I'm presenting now is titled RRTR Update, Legislation Review, and there should be a table with 4 different lines that's got some gauges on it.
I can see it now. I couldn't see it before. Thanks.
Great,
Yep.
excellent. It might have just been a gremlin. Sometimes it just takes a bit of a refresh. Thanks for bringing that to my attention, Craig. So the second line talks about a statement of resources and commitments. Again, this is one of the recommendations that the expert panel suggested was relevant for small size charities because small size charities are able to use cash accounting. Once a charity size is medium, then accrual accounting must be used for medium and large charities. So the expert panel felt that the ACNC AIS was skewed towards charities that were using accrual accounting. And for that reason, they suggested that there might be a need for small charities to provide information in an alternative form to help them convey the resources and commitments that relate to their entity to give a more fulsome picture without having some of that accrual information which is available. So that was implemented in 2022 in the 2022 AIS. And I should also mention what I talked about, the increase in size thresholds, that is already in place now. That also came in as part of the 2022 annual information statement. The third change, which affects only large charities, that is remuneration of key management personnel. So depending on the type of financial report that a charity is preparing, many charities reporting to the ACNC were already providing this information. However, special purpose financial statement preparers may not have been providing this information because there is not a requirement to do so. So this change really affects that part of the sector. And so now we have a situation where all charities need to provide some information about remuneration of key management personnel in the AIS. In addition to the annual financial report, depending on the type of financial report which is being prepared. The fourth change, which comes into play in July of this year as part of the 2023 AIS, this one we consider to be much more complex, and this is going to have much broader ramifications to the sector, and that is the reporting of related party transaction disclosures. Again, a recommendation from the legislation review. The review was very clear that it should apply to all size charities. And so what we have done, and I'll talk about this more shortly, is we have developed some changes depending on the size of the charity to help implement this reform and implement it in a proportionate way that is fit for purpose for different parts of the sector. Key points that I will make here are that in terms of reporting related party transactions, record keeping is critical. So we've really been trying to impress upon all size charities that they must have adequate records, appropriate records that document related party transactions. We do have a register. We do have information about policies and procedures on our web guidance, and these are the sorts of things that we are encouraging charities to consider and implement in the context of their organisation. And one of the other key requirements around this is managing conflicts of interest. So what we have found, particularly from our compliance and enforcement space, is that charities that find themselves in trouble, not meeting their governance standards, we do often find that conflicts of interest are present and they're not being managed appropriately. So what we're saying to the charity sector is that we know charities are exposed to conflicts of interest, and conflicts of interest need to be managed. They're not automatically a bad thing. It is purely about the management and the transparency of those. So, borrowing someone else's words, sunlight is the best disinfectant. And so what we are saying to charities is that where a conflict of interest exists, it needs to be documented. That information needs to be shared with those who need to know that. Anyone who is in a conflicted situation, they should not be making decisions in relation to that matter, and they should be removing themselves from the deliberation and the decision making associated with that conflict of interest. With those points being implemented, we are of the view that charities should be able to manage conflicts of interest appropriately, making sure that they are transparent and they've got adequate records in place to support those types of issues and matters. So moving forward one slide now, that should be talking about the legislation review special purpose financial statements. So the ACNC regulation was updated. That is the 2013 regulation. That is now superseded by the ACNC regulations of 2022. So as part of this suite of reporting changes which we're talking about today, the regulations were remade. They only exist for a limited time frame, so they've been remade. And what we've seen in the remake of the regulations and part of these changes to reporting requirements is that charities who are preparing special purpose financial statements, they have the option of applying the simplified disclosure requirements in AASB 1060 for key management personnel from 2022, and then from the 2023 reporting period, that is in the 2023 AIS, they can use that particular standalone standard for all disclosures that need to be made. So it's a little bit of a confusing area, this one, because AASB 1060 is a general purpose financial statement standard, which is applicable or can be used by charities that are preparing special purpose financial statements. We just call this out to make sure that there is awareness. And what this means is that the disclosures required in relation to the standard 1060, whether that be related party transactions, whether that be key management personnel, whatever it might be, the charity, if they choose to use the disclosure standards from that standard, they need to apply that standard in its entirety in relation to those disclosures. So when this was being formulated, we did have a lot of questions asking about, well, can we use a little bit of the disclosure requirements from AASB 124, for example, and a little bit of AASB 1060 for something else? And the answer to that is no. If you use 1060, then you need to apply those disclosures in entirety for all relevant matters, rather than picking and choosing, if you like. I should highlight throughout the presentation, which I am happy to share, Ushi, in case you want to circulate that to attendees. The slides do include web links. I know they're quite long, so having the slides would be helpful in terms of just copying and pasting that into a web browser. But we've tried to include relevant resources and guidance throughout the presentation to help. Moving forward, I am going to move on to the streamlined reporting status. So I've just changed the slide. Hopefully that's flown through to what you are viewing. We are now in the position that the ACNC has reached streamlined reporting arrangements with all state and territory regulators. And that means that whether you are talking about an incorporated association, whether you're talking about a charitable fundraiser, all states and territories now have the option of getting the information that they need from those entities through the ACNC. That means that those charities only need to report to the ACNC. There is a series of optional components in the AIS, and if charities provide that information and that link so that we can share that information back to those state and territory regulators, that will fulfill the obligations of most incorporated associations and charitable fundraisers. There are some exceptions, but by and large, the vast bulk of those organisations can report once, and we share that information across government to remove that duplicated reporting burden. Moving forward one more slide, we are now moving into related party transactions. So we do acknowledge that this is a big change for the charitable sector. We do acknowledge that there's going to be a lot of help needed across the sector to understand these new reporting requirements. And that's really why we're trying to use these types of opportunities to make sure that practitioners and professionals who are supporting the not-for-profit sector and charities specifically, making sure that you're aware of what the requirements are, that you have access to the resources that we have developed, and that you're understanding what it is that actually needs to be reported in the AIS and included in the AFR. Now, what we have done is, and I referred to this a little bit earlier, we have used two different definitions in relation to defining a related party. Why have we done this? The key reason is that small charities, as I mentioned earlier, they don't have a requirement to prepare financial statements. And so we felt that there needed to be a bit of a simplified definition for small charities compared to medium and large charities that do have to prepare financial statements. So for small charities, again, this is a definition that we have used. We outline that a related party is a person or an organisation connected to the charity and has significant influence over the charity. We should point out, and I do highlight, that related parties apply to responsible people and their close family members. Responsible people is the term that the ACNC uses for the board. You might know it as a committee, a board, you might call them trustees. Whatever term you use, responsible people are those which are responsible for the charitable organisation. Responsible people are listed on the charity register, and a charity has ongoing obligations to make sure that responsible people are up to date in terms of the information that the ACNC holds about each charity. It also includes senior management and their close family members. So fairly broad, encompassing both responsible people, that is those who are responsible for the entity, and the senior management, that is those who are really managing the day-to-day operations of the organisation. It should be highlighted that not all employees or volunteers are related parties. So that's one thing to know. And again, the difference with small charities in comparison to medium and large charities, because medium and large charities do have to prepare financial statements, we have used the definition that exists in the accounting standards. And so really, AASB 124 talks about the definition of related party, and that extends to people and to entities that are meeting that definition. I won't go through that definition, but I do highlight and underline that there is quite a lot of information which we have included on our website, which is in AASB 124, which outlines what a related party is. Now, moving on to related party transactions. So a related party transaction is considered to be a transfer of resources, services, or obligations between related parties. And it does not have to include a financial payment. So some examples that we've included here, it could be purchases or sales. It could be receiving goods, services, or property. It could be loans, or it could be a responsible person of a charity providing professional services to the organisation that they are a responsible person of at a discounted rate. And what we see in the charity sector is that this is quite common. And so what we really want to do here is, again, shine that spotlight on the fact that these arrangements exist. It doesn't necessarily mean that that is a bad thing. However, the key part here is to make sure that where these arrangements exist, all of the responsible people of the charity know about them. The senior management of the charity know about them. These arrangements are documented in terms of due diligence and arm's length. The person that is the related party and might be providing those services at a discount rate, they shouldn't necessarily be making the decisions about these arrangements. They should be removing themselves so that they are being independently and objectively assessed by others who are able to make that assessment that may not have that conflict of interest. So that's really what we're saying. Again, we do highlight that it is very important, and we encourage charities to have some sort of template, a register of related party transactions that they can populate and update periodically to make sure that there is awareness and understanding within those who are charged with governance and those who are making decisions about what related party transactions exist and what arrangements are in place. And obviously, if a charity does have a register and uses the template that we have made available, and I acknowledge that many organisations might have other templates or other ways of managing this information, and that's fine. Whatever is fit for purpose for your organisation is absolutely fine to use, as long as it captures the key information and as long as those records are kept. Then that is a matter for each charity to determine what is fit for purpose and best for its context and best for its needs. But whatever records a charity has to support related party transactions, that will be really helpful, obviously, when the reporting needs to be done in the annual information statement as part of the reporting at the end of the year. Moving on to the next slide, I do want to talk about materiality and privacy. So one of the most common questions that we are being asked in relation to this is, well, we have a lot of related party transactions, but they're for really tiny amounts and they really don't matter. And materiality really needs to be applied here. So that requires professional judgment and it requires thinking about the context that the charity operates within and the specific circumstances that relate to those arrangements within that charity. So there might be some very, very minor related party transactions which are actually material. But by and large, we expect that most related party transactions, if they're not material, they don't need to be reported. Again, there might be some quite significant related party transactions that don't need to be reported. And it really goes to the context of the related party transaction and the circumstances around it. And I'm specifically going to call out the examples of ancillary funds. So we know that the ancillary fund guidelines, they are really the umbrella and the shining star, if you like, of the reporting obligations that ancillary funds need to meet in terms of their reporting. So there are examples in the ancillary fund guidelines that talk about not needing to report donations, for example. Those amounts might be significant. They might be material, but because the guidelines talk about the fact that they don't need to be reported, they don't need to be reported. So we have developed some guidance. I really encourage you to read that guidance, and we are very open to feedback. So one of the really important components when we develop guidance is to get that feedback. So we like to test it with charities, with professionals such as yourselves, to make sure that it is useful and that it assists with understanding obligations that a charity needs to meet. So we've had some really beneficial conversations about how we might change that guidance, and we have iteratively updated the guidance over successive months to make sure that it is fit for purpose and as best as it can be. And as I said, we've had some really, really good insights from professionals such as yourselves about what we might add and what might be good to include in the guidance. So I really, really encourage you to have a look at it. Now, again, we have broken up materiality in terms of the size of the entity. So for medium and large charities, materiality is really centred around the fact that omitting it, misstating it, or obscuring it could reasonably be expected to influence someone using that information to make a decision. For small charities, it is really around the context of a charity's specific circumstances, and there is no dollar value. So again, I should highlight that there is no dollar value associated with related party transactions, and that is really because it is very difficult to put dollar values on what is acceptable and what is not acceptable in terms of disclosure, because we don't understand the context of every single charitable organisation. It requires professional judgment, and it requires knowing the information that the accountants, the preparers of the financial statements, those charged with governance, are aware of behind the wall of that particular entity. Now, some examples of material related party transactions. This is not a definitive list, but these are some of the things that we have really tried to sort of underline that, generally speaking, these are going to be material related party transactions, subject to the context of the organisation that they exist within. So a loan to a related party by a charity. And again, interest may or may not be charged. That would generally be a material related party transactions. The sale of goods or assets by the charity to another organisation that is controlled by a related party, and that might be a board member of the charity. Again, generally that would be considered material. Fees paid by the charity for professional services, which might be provided by a related party to that charity. Salary or wages for a close relative of a charity board member. Sales of goods or services to the charity by another organisation that is controlled by a related party. significant use of charities' property. So again, even if there's no payment or exchange of money involved, we would generally consider that that would be a material related party transaction. Or lease arrangements between related parties. Again, this list is not definitive, and we do have information and scenarios on the website that are related to these examples and include a little bit more information, but it's really hard for us to include absolutely every scenario that is going to exist. It's impossible. So we've tried to create examples that are reasonably common, that can be potentially thought through by professionals and thinking about whether they might apply in the context of another organisation which might have slightly different circumstances. So now moving to what we consider not to be material. And again, we've tried to use some common examples that we know occur in the charity sector and based on feedback and discussions that we have had. So quite often a charity will reward related parties or board members or those who are charged with governance, and they might not pay them for their service, but they might give them a gift, whatever that might be. Generally, those things we wouldn't consider to be material. Now, donations is one that we are getting questions about. Generally, we consider that donations received from a related party into the charity will not be material. Again, generally, we don't know the specifics of every particular set of circumstances that exist. It requires professional judgment by preparers of the financial statements. Volunteer services provided by a related party that are similar to services provided by the charity's other volunteers. Reimbursement of out-of-pocket expenses. So generally, if they're similar to, similar in terms of what is being reimbursed to a related party that might be being reimbursed to other volunteers or other people who are being paid by the charity, generally they're not material. A related party buying goods from the charity on the same terms that are offered to the public. So again, if there is no benefit and it is the same that is being offered to the general public, we would say that there's not really grounds to consider that to be a material related party transaction. But it does require thinking about the circumstances, the context, and making sure that all related party transactions have been considered. And if the outcome of that consideration is that they shouldn't be reported because they're not material, document that. That is a decision that really needs to be documented and kept by the charity so that if there is any questions later on, or if the board members change or different employees move on and new people start, it's really critical that there is the ability to look at those records and understand, well, why wasn't that a related party transaction? Oh, okay, I see that that's been documented. These things have been thought about, and the conclusion was that it's not material based on these circumstances for this reason. So that's the sort of stuff that's really key that needs to be documented by the charity and retained. So moving forward, one of the questions that we are getting is really, why do related party transactions need to be disclosed? So what? What's the problem? The key to this is when the legislation review occurred, there was a lot of discussion around the need to make sure that charities exist for public benefit. Charities cannot exist for private benefit, and therefore there is a risk that if related party transactions are taking place between a charity and the related party, then there is a risk that private benefit will be happening and that there will be conflicts of interest which are not being managed. And so this reporting is being implemented really to make sure that those risks are reduced. And through transparency of related party transaction reporting, these transactions will be visible to those who are interested in looking at them, and it will help to improve the governance within charitable organisations, which ultimately will increase trust and confidence in charities, that the resources used by charities are being used for the charitable purpose, and really reducing that risk that the charity's assets or the charity's resources are going to be used for improper or ineligible activities. And that really goes to that private benefit element. So again, the reporting of related party transactions, that starts in the 2023 AIS. So that will be available in a few months' time. It's already mid-April. Easter's gone. I heard someone the other day say it won't be long till Christmas is here, and I thought, whew, let's just take a breath for a minute, because before Christmas, obviously many charities will be doing their AIS for the 2023 period, and that will cover the previous year, looking in the rear vision mirror, which for many entities, that year started on the 1st of July 2022. So charities really need to make sure that they have adequate records, that they have a register in place, that they have been keeping track of relevant transactions, and that they're putting in place systems, processes, and controls to capture this information so that it can be used when they complete their reporting to the AIS. Now, I should highlight, and I have touched on this a couple of times, these changes will be bigger for parts of the sector. They will be bigger for those entities which are currently or have previously prepared special purpose financial statements, and they haven't needed to think about this as one of the mandatory accounting standards that apply to special purpose financial statement preparers. They will also be new for smaller size charities. And we know that the vast majority of charities in terms of the number are small in size. So there will be many, many thousands of charities which have never thought about related party transactions, which need to think about them for the first time. So I'll start off with small charities. Because they don't need to prepare a financial report, they will need to report this information in the annual information statement. There will be new questions added as part of the 2023 AIS to capture reportable related party transactions, noting that the definition for small charities is different to medium and large. The middle part of that slide outlines medium and large charities. And what that is really differentiating is the fact that where an organisation has been preparing general purpose financial statements, and that is abbreviated as GPFR on that slide, there shouldn't be any change, because these organisations who were preparing general purpose statements should have been complying with AASB 124 or 1060 already. What is new for that part of the sector is that there will be questions in the AIS that they will need to answer. Where medium and large charities have been preparing special purpose financial statements, they will be impacted quite significantly, and they must comply with AASB 124 or AASB 1060 from this reporting period. One of the important things to note is that if a charity is adopting these disclosure requirements for the first time, comparatives are not required. There is no need to go back and prepare or recreate comparative information. 2023 is the first year of reporting. Report purely for the 2023 period. And then in 2024, when the second year of reporting is being completed for this information, you will have the comparative information from the prior year. So it's really, really important to note that there is not a need to include comparatives in the first year of adoption for special purpose financial statement preparers. The comparative will only be required in year 2, which is the second year of meeting this requirement. And obviously the comparative information will be available from the 2023 period. What we have done, and I will talk about this briefly, what we have done in the annual information statement is we have included, and I'll move to the next slide, we have included a list of categories. So this applies to all sized entities. There is a leading question that asks whether the charity has related party transactions that need to be reported. If the charity has related party transactions and answers yes, then each of these categories will be available for population in the AIS. So if a charity says yes, they do have to report something, they need to indicate the categories of transaction in the AIS. They can pick one, they can pick all, they can pick 2, they can pick 3, 4, 5, 6 categories. But if they answer yes to needing to report related party transactions, this question is mandatory. What we have done in the AIS is to include an other category, which really is for the reasons that we've included the vast bulk of what we think will be relevant related party transactions, but there could be circumstances which we just are not aware of that might exist in particular charitable entities. And so that's why we have included the other category as a bit of a catch-all so that charities can describe any other related party transactions which they might be reporting about. Further, in addition to the categories, there will be another free text field which charities can use to provide information about the related party transactions that exist within the charity. What we envisage that might be used for, particularly for organisations who do prepare a financial statement. So in the AFR, they might have a disclosure note which talks about the related party transactions. That will be applicable to them because they might be able to reference a note number or a page number from the financial report, which might include extensive information about the related party transactions of the entity. And because it's included in the financial report, we feel that that's a way that we can minimise the regulatory burden. Instead of having to copy all of that and put all of that in the AIS, what we're hoping is that charities will refer to the page number or refer to information which has already been included, which is relevant in relation to reporting those related party transactions. Now, as I said, for those organisations, those charities who are preparing a financial report, the disclosure should comply with AASB 124 or 1060. And there are minimum requirements. So these are taken from the accounting standards. And again, this information is available on our web guidance. The address is there at the bottom of the slide. I do encourage you to have a look at that. And if you do have any thoughts or feedback about that guidance, we're very, very happy to hear that from you, and we look forward to hearing any feedback that you may have. I do just want to touch on the resources that we have available, and I'm just mindful that we've got about 9 minutes left. So I do want the opportunity to have a bit of a discussion in case there are questions. And what I want to show is that we do have a series of resources available to support charities, to support those charged with governance, to support people who work in this space, who are preparing the financial statements, who work in the finance team, who are aware of perhaps related party transactions which might exist in a charitable organisation. We do have a large number of resources available. At the top there, we have an e-learning program. So we've launched a suite of modules that we've called the Governing Charities program. And these are all online e-learning modules that cover the basic requirements and the understanding that we want those who are joining a charity board as a responsible person, we want them to know. The beauty of this program of modules is that you don't have to do them all. You can seek out different modules that have different topics. You can do part of a module. You don't have to do all of the module. They're free. So I really, really encourage that if you're thinking about, well, what should I get a new responsible person who's joining the board? What should I get them to do in terms of their induction or their training? This might be a really, really good place to start because it does cover all sorts of topic areas, from governance standards to external conduct standards to financial reporting. And you can have a look at the suite of 12 modules and decide that you want some undertaken or completed, or some might not apply, and that's perfectly fine. They are free of charge. The only charge that will apply is if you want a certificate. So there is a small cost to get a certificate to say that you have completed the self-assessment aspects, the assessment component of the module, and you want some sort of certificate. There is a small cost to that. We do have a financial report checklist. Now, this is a really key resource that we make available to preparers of financial statements for the purpose of lodging with the ACNC. It outlines a whole series of checks and reminders and prompts to make sure that the financial report which has been prepared and is going to be submitted to the ACNC is complete, and it does meet all of the requirements of the ACNC reporting framework. It has recently been updated, so I strongly encourage you to have a look at this and make sure that any of your colleagues or any other people that you know of who prepare financial reports for the ACNC, share this with them so that they are making sure that they are meeting the requirements that they need to meet before they prepare or lodge the financial reports with the ACNC. The third resource I'm highlighting purely because I mentioned earlier that the regulation has now been superseded, and the new regulation started on 1 April 2023, and that's the ACNC regulations of 2022. So they are now in effect from the 1st of April of this year, and obviously the audit or review, which is a requirement for medium and large-sized entities, does have a reference to the ACNC legislative framework. And so those references to the regulation have been updated to the regulations of 2022. So I'm going to stop there. More than happy to take questions. And I will just remind you that these are all of our social media connections. These are the ways that you can find information. We've got the website there at the top. We are on Facebook, we are on Twitter, we are on YouTube, we are on LinkedIn, and I really encourage you to have a look, particularly at our website, and look at those resources which have been talked about today, and I will be sharing the slides for distribution and circulation so that you do have the ability to reference or look at those resources as needed moving forward. So thank you very much. Happy to answer some questions, allowing for obviously time. So I'm not sure, Ushi, if in the room, does anyone have any questions, or you might want to prompt me? I've just stopped sharing. Are there any questions that anyone needs to have answered? Surely I didn't answer everyone's questions.
There are lots of questions in the Q&A.
Okay, so someone will need to facilitate that for me. I don't have access to Q&A. Let me just open that up.
Sorry, I hadn't seen that myself, so I'll jump in and answer some questions too.
Thanks, John. So I'm having trouble. I'm not able to open that. It's not allowing me to open that. So if, oh, here we go. It's thinking. Right, so the first question I'll answer from Marianne. If a small charity chooses not to do an annual financial report, where would they lodge their related party transactions? So there will be questions in the AIS, and that is how an organisation that doesn't prepare a financial report will report their related party transactions. There's a question from Patrick. Sorry, was that you, Ushi?
Yeah, it's me. We did have a question in the room, but it was on mute here. So sorry about that. And they did all clap for your amazing presentation. They thought it was great. And I think it's Nisha who has a question in the room. If you don't mind taking that one before we go to the Q&A.
Great. Nisha,
Yep.
Please tell me what your question is.
Hi, Mel. Thanks for a great presentation. My name is Nisha. I'm from the Smith family. You talked about streamlined recording requirements in all states and territories now. I did have a specific question about New South Wales. So in order to comply with New South Wales charitable fundraising requirements, we have traditionally included a note in the financial statements to comply with that. Would you be aware whether that note is now no longer required?
So New South Wales, that's a very good question. Thank you for raising it. New South Wales is slightly different. So in the annual information statement, there is a compliance statement that must be ticked if the charity is complying with the requirements that apply in New South Wales. In terms of the financial statement elements, there are some differences, some unique set of circumstances that apply to New South Wales fundraisers, and I would suggest that that note is required. However, the ACNC can collect the information needed for the Office of Fair Trading in New South Wales, but it needs to meet those requirements in order to, I guess, comply fully. So it's a little bit circular, but what I'm saying is that in the AIS, you need to complete that compliance statement. And in the financial report, you need to meet the reporting requirements that apply to New South Wales Office of Fair Trading. If you do those things and report to the ACNC, we give that back to New South Wales Office of Fair Trading, and that completes or satisfies your reporting requirements. But I do note that, yes, New South Wales is a bit different because there is those specific financial reporting requirements that do relate to fundraising. Does that answer your question?
Yes, perfectly. Thank you so much.
Great. I'm mindful of
Yep.
time, so Ushi, I'll just, if that's
Yep.
if that's okay, I'll just look at the second one that I was starting to
Mariam,
answer.
was it? Or Patrick?
Patrick, so
Yep.
the question from Patrick, do we need to disclose related party transactions for which the related party provides a rent-free office lease? So hopefully this one, I think, John, correct me if I'm wrong, this one's actually included as an example in terms of, even if there is no payment made, that would generally be considered a material related party transaction. So again, professional judgment is required, and the context and the circumstances all need to be taken into consideration. But on the face of that question, yes, that would be a reportable related party transaction. I'm mindful of time.
Yeah.
Lucy.
Yeah.
So
Yep.
what
I-
might be best, if anyone's able to, I don't know how, but if anyone is able to extract or get those
Yep.
questions, we can provide answers to those,
Yeah.
but they'll need to be shown to us.
Yeah. John's been answering some of them. I
Great.
think in the chat box there was a question from Craig. Oh,
Was that
yeah,
about
Craig's gone. Yeah, Craig's
reimbursement
gone.
of expenses?
Yeah, yep.
I think Mel did end up covering that
Okay.
on the next slide.
Yeah.
Oh,
Yeah.
yep.
There's
So
one
that's
from
again,
Sylvia.
that's included in the examples. Yep. Sorry.
I think there's one from Sylvia. That one might not have been answered, and it's there is no reporting for small charities. If they want to a review on the report, do they still need to comply with all standards?
So this is an interesting one. So small charities don't need to prepare a financial statement for lodgement with the ACNC, but where they do prepare a financial report, they do need to meet the requirements that would apply. So effectively what that means is, and John, I know you want to say something here. Do you want to talk now?
Yeah. So sorry. Yeah. So small charities can, under the ACNC Act, they can submit whatever they like. We encourage them to submit a financial report, but they don't have to comply with ACNC financial reporting requirements. That's only medium and large charities. I think, Mel, what you might be referring to is basic religious charities. If basic religious charities do not have to submit a financial report to the ACNC, but if they are medium or large size and they choose to do so, then the financial report must meet the ACNC requirements.
Perfect. Thank you.
Thank you. Mel, we'll have to close this session, being mindful that most people are on their lunch break right now.
Yeah.
So I would say a big thank you to you. I think it was an amazing session, very informative. And also I'm sure people would find value in it. So I'll be talking to you after this session, and then we'll see how we're going to share the slides and also share the recordings. A big thank you to you again. Just to let people know, the next session will be on the 20th of June, and we'll have something from the Australian Institute of Governance, who'll be talking about governance of public sector and not-for-profit organisations. Thank you very much, everyone, and thanks again, Mel and John.
Pleasure.
Thank you
Thank you very much. Bye-bye.
Thank you. Bye.